Hey guys, Boris Lassman from BK Force. Welcome to our weekly technicals for the week of 6/17 through 21. More dollar weakness to come. Trading foreign exchange and margin carries a high level risk, and you should be aware of all the associated with trading forex on margin. I ask you to look at this disclaimer very carefully and become aware of all the risks associated with trading on margin and seek advice from an independent financial advisor if you have any doubts. Well, yes, I think the big story is continued dollar weakness. Obviously, this whole week we had big declines in dollar yen, but I kind of want to first take a look at Eurodollar because Eurodollar is just sort of inching its way towards a very key level here at the 33, 34 level. 34 got rejected yesterday, kind of bounced around between 33 and 34 today. But if you look at it on a longer term time scale, it is clearly approaching some pretty interesting resistance points right over here. So 34, there's a reason you can tell this on the weekly why 34 is just kind of a tough nut to crack for the time being. But a break above here really opens up a run towards 30, 35, and ultimately really a test of the longer term high at the 37. And overall, even on the weeklies, certainly on the dailies, the price structure just looks pretty bullish. You basically have higher set of lows continuously here, a nice big turn out, and only kind of a failure back down below the 32 level. I think almost 3150s would kind of negate, I think, a lot of this bullish structure. I think, let me just see what the lower on this thing is. Yeah, 3150 probably would completely engulf this weekly candle and turn the price action negative. So overall, it's a pretty positive structure for the euro, and kind of basically continues to say that the dollar remains relatively weak on a high beta basis. Cable, similar kind of a story, although cable really kind of washed out. Well, it didn't really wash out. It's still holding this 57. 57 has been just as sticky for cable as 34 has been for euro, but a break above 57, and you can see why. Again, major amount of resistance here before we kind of broke out earlier in the year, and then support over here that broke down to a much steeper decline all the way to 48. So again, very big recovery, higher lows, looking very strong on the weeklies. May have a little bit of a pause here, but if we can take out the 58s, it really opens up a run all the way out to the 160s on cable on a longer term basis. Um, Dollar yen, not much you can say about it. It is just really, look at this huge horrid candle. Broke every level. When we broke down below 100, we took out 97s, 98s, 95s. The only thing is that 94 does seem to be, at least for the near term, kind of a value proposition, but I think it can get tested further to the downside. And I think the true value proposition for dollar yen for the time being, for those chasing the bottoms, is going to be 92.50, because 92.50 was the spike low from which we sort of started this major leg to the upside that broke out the 100, and that means that that's going to be a big double bottom support point, I think, for longer term accounts. So it may not be over yet for dollar yen, but it is very close to, I think, a relatively decent support here at 92.50 on a time basis. And obviously, Aussie finally turned from its disastrous decline. Look at this, by the way. This is weekly candles, so you have one, two, three, four, five continuous weekly declines. That's a very, very brutal decline. But if you look at the analog, it's not. The thing about Aussie is that it tends to be very trendy. One way it's very trendy, the other way. So we had this big sell-offs over here, and then we have 3, 4, 5 weeks of continuous uprise. So which means that if you sort of believe that there's a potential analog here in Aussie, there's a price action, we could go to 98, perhaps even 99, before finding utter and complete exhaustion. Aussie printing its first positive candle in 6 weeks. At this point, clearly the 93 level, it's 90, I believe it's, to be exact, I think it's, what's the low here? 93.26 is the operating swing low for Aussie. If we come in and break that, that would just be incredibly bearish, and would probably suggest we may be headed towards the 90s. But for the time being, it really looks like the Aussie is bottomed out. That is the operating bottom. And for those who are bottom fishing on a longer term basis, this could be an interesting trade, with possibly a couple of hundred more points to the upside before it finds any meaningful resistance. Kiwi, similar kind of a thing. Kiwi really, I think, surprised investors because the RBNZ continues to talk the currency down and it continues to go back up. So Kiwi Took out the 81s, but then came back off of it late in the New York afternoon. But still looks. Look at this monster candle. It's a pretty bullish candle to the upside. And again, Kiwi suggests that if we can push through the 82s, it opens up a run back up to 84. So that's going to no doubt create massive intervention, both verbal and perhaps even physical, from the RBNC. But for the time being, it looks relatively bullish. And if you look at a longer term chart, look at this. Definitely holding the higher lows. It definitely looks like it could be an interesting turn. Another one of those very, very long term bottom fishing opportunities where you have to give yourself 200-300 points of stoppage and perhaps maybe 2 or 3 weeks to let the price action work out. But certainly it looks interesting on a turn basis from a technical point of view. And lastly, I kind of just wanted to look at dollar CAD. I haven't looked at it in a long time, but I think what's interesting about that is that while you see the Aussie and the Kiwi turning very heavily, dollar CAD has just been unbelievably brutally held down at the 101.50 level. So to me, this says something very important. If you want to see how this has been working, let's even go on the 4-hour chart, because I think it will just look at this, just refusing to break down below the 101.50 level, which basically says, I think, is something very interesting, that we either are going to, once it does break, we either have a very reasonable chance to take out, to come back down towards parity if it does break, or if this holds, we'll probably head it right back out to the 103, 103.50 level. So from that perspective, I think because we've been at this juncture so much, it could have much more meaningful longer-term duration. Generally, I think if we take out the 101.25s, 101.1s, we are looking at parity with high degree of probability. And conversely, if we come back out to 102.50s, then we're probably turning our way back up towards the 103.50s, because this bottom definitely holds. It's really, really hard to determine which way the thing is going to break, because even though it has held so long, you notice that every single bounce off of it has been more anemic. This is a 4-hour chart, so it's just, volatility compression is just very, very tight. And generally, when you have tight volatility compression, that tells you that a break one way or the other could have meaningful directional consequences. So another one that I think is worth watching, just simply because it's been relatively quiet, and may now start to really boogie one way or the other. That's how the week is shaping up. I will see you guys next week. I'm off to Europe, and I hope to be with some of you in Madrid, trading in Madrid live. If I don't get a chance to meet you there, then I may perhaps see you guys in London. Otherwise, I'll be back in New York the week after that, and we'll start right back with trading FX. This is Boris Schlossberg for BK Forex. All the best to everyone. Over and out.